All right, AMC. In this video, I'm going to talk about AMC. A bit of technicals, a bit of options flow. I'll try to make this video as short and to the point as possible. Can't really touch everything, obviously, but I'll try to talk about as much as I can to bring value. That's the only purpose of this video. You're not gonna see much of green crayons or to the moon chants, or me telling you what to do, buy, sell, whatever. Only trying to help and provide value. I am not a financial advisor. I'm not a tax advisor. Nothing I say should be taken as financial advice. Always do your own research. You are responsible to your own portfolio, exactly as I'm responsible to mine. Everything I do and everything I talk about is for educational and entertainment purposes only. All right. AMC. This is a 1 year chart. Daily candles. Each candle represents 1 day. First of all, just showing you something quick. Okay, this is the March move to the upside on AMC. This is the August move. I want to show you a bit of a macro look, why it actually moved and how you can follow it as well. This is March on SPY. Okay, the ETF that tracks the S&P 500. March, we had a market squeeze. In the end of February, we start seeing a lot of flow coming in, options flow that showed that the markets are ready to kind of cover shorts, cover puts, and have a volatile reaction to the upside. And then obviously we had the move on March. August, July was kind of the same thing. A bit of a difference in terms of what created the squeeze. But again, options led just like everything in this market. That's what I believe, right? Derivatives move markets. That's what I think. Especially in the bear market, repositioning of market makers and options dealers, this is what's going to move markets, and this is why I follow options flow and dark pools flow, any type of flow that can help us better understand and read markets. Now, this is the SPY, what I wrote here quick on my Twitter. If you guys don't follow me, I'll link my Twitter account. This is Orlando. I'll link it below. But the market is getting ready for a squeeze. Bear straddles all over the place, meaning short is still the longer play, which obviously we saw. But the impatient and non-strategic bears will get burnt and squeezed. Lots of inflows coming on meme stocks as well. Then we saw a bit of move and everything. Now, this was here mid-June, and then obviously we had the July-August market squeeze. And this is where we saw the last move on AMC. Now, March was kind of an evening star, as you guys can see, a big green candle following by kind of a small bodied candle. Usually it will be a red one and then a big red candle, right? It calls an evening star, as you guys can see here. Evening star on the right side, green crayon, kind of a dodgy or small bodied red candle followed by a big red candle. And morning star is the opposite, which is one of my favorite patterns. It's basically going to show you a reversal from downside trend to the upside. So it's a big red candle following by a doji candle following by a big green crayon. Now back to AMC. Here it created kind of an evening star, so kind of a reversal. On the August squeeze, if you go to the weekly instead of the daily, you can see here kind of the same thing. Big green crayon, doji, big red crayon, boom, downside. Okay, again, not just trying to help and bring some value, and that's it. Now, over here, it's very important. I want you guys to understand, if you follow options flow and you see call spreads, this is where I posted AMC. I've been waiting for this. Institutional call spreads are starting to come in the tape, meaning in the options tape. This is where I saw the options tape activity was really interesting, and then it kind of did a 92.69% move in 7 trading days. So that's a big move, and it usually happens after a market squeeze, just like we saw before, where shorts covering across the market, and then memes see more flow and more pump. Now, let's go to today. Let's do a 4 hour. That's mainly what I'm watching, and that's what we follow in on flow trading daily. It's very important to say because it can really change daily. So you want to keep watching options flow, keep watching options chains, and we update it we have members that don't even trade options at all, right? whether they buy options, sell options, whatever, they just long the stock. I don't like short sellers. That's me. I don't have anything. If you're a short seller, I would love to hear your opinion as well, because I love to hear other sides of trade all the time. But I don't like notorious perma bears or short sellers. It's just me. I'd rather be on the long side, on the retail long side. Now the green dotted line, the last time we saw activity like what I'm going to talk about today. You see this? The green dotted line here, it's a tiny one. This is November 9th, and then obviously we had this move. Okay, which was, let's do quick, 65% move in 5 trading days. All right, now let's go into today. Today was VIX expiration, which is VIX expiration, December 21st. Meaning options expiration on VIX, the last monthly one of 2022 happened today. We're gonna see a ton of volatility in the next few days, even weeks, leading into January monthly OPEX, which is here, January 20th of 2023. So this range right here, this is the SPY, going to be very volatile and fun. Now AMC, options flow, that's what I'm going to talk about now. This is the 4-hour. This is a green crayon that we drew, but it kind of follows, right, because of the straddles that I'm going to talk about right now. And again, I'm talking about it to help people, and because a lot of people asked me about them on Twitter. So I said, why not? Let's do it. This is from yesterday, but we did see similar action today. We had some June straddles and December for this Friday. I'm not going to talk about the June, don't have time for it in this video, but let's talk about the December 23rd for 2022, which is in 2 days. Look at the $8 calls here, and look at the $8 puts here. This is a straddle. How do I know it's a straddle? First of all, what is a straddle? A long straddle is a strategy where a trader will go long volatility. They don't know where the price is going to go, or they do know, but they want to hedge volatility. So they buy the same exact strike. Usually it's at the money, by the way, but they'll buy the same strike for the same expiration, as you guys see here, December 23rd, 2022. Same is here, December 23rd, 2022. And it's exactly at the same time. So you can tell the same trade, same quantity, 1750, 1750. So this is an $8 straddle. Now this is a bear straddle. Why? Because the $8 puts are in the money. So a lot of people ask me, what, it doesn't make sense. Why would they buy $8 calls? They won't. You got to think about it in the bigger picture. This is from yesterday, meaning they opened this here. All right. This is where they opened it, where AMC was traded at, it's going to tell you here. Take a look here, underline. You see the underline? Underline here, 4.913. Same as the bottom one, 4.913. This is the underlying stock, the price of AMC, when they opened this trade, which is at 8:52 a.m. Pacific time. So 4.9, what does it mean? It means that they opened it here, over here. So let's do a horizontal line of where they open it, 4.9 we said, right? Where is it? 4.9, yeah, all right. The red line over here, that's when they opened it. Now, I'm not gonna talk about dark pools and stuff like that because it's, again, different video. But options flow, it's straddle. They bought the $8 puts because they wanna create pressure, a downside pressure, which we call it negative delta pressure, right? Negative delta is put side pressure to the downside. Positive delta is what happens to the upside. This is December 23rd options chain for 2 days from now. And you can see the parenthesis is going to show you 7 DTE because this screenshot is from a few days ago. This one is from today. See? So it's the same exact chain this Friday, today, and this is 7 days ago. If you just look quick at the $8 strikes, you can see the call side on the left side. This is from thinkorswim, by the way, TOS. $8 strikes was almost 4,000. Here a little bit above 800. And then obviously today you can look at the chain, much higher here in the $8 calls and much higher in the $8 puts. We tracked it, we followed them on flow trading, we followed it daily, again, to just help longs, whether they trade options or whether they hold the stock and they like the stock and they hold it. We want to help them see direction and what the future holds, at least what flow says. Now we know that they opened both legs. What does it mean? It means that they want to create downside pressure. This is the 2-day DTE. 2 days to expiration on this contract. The only reason someone would pay over $500,000 for just this trade is probably someone that is short the stock and again is prepared to maybe cover some derivatives, options, stock, whatever, right? And is hedging upside volatility by creating pressure from downside. Now, let me try to simplify it because I know that I talk about some stuff that a lot of people don't exactly understand what I'm saying. Again, last time that we saw a similar trade is this green dotted line. What they did, they wanted to create right after earnings on AMC, they wanted to create some downside pressure. Why? Because they knew that the price action probably going to go up. So that's what happened. Again, it's a hedge. What they did here, it's a hedge. You can't think about it as a directional trade because it's not. It's someone big that probably hedged upside volatility. Now, quick look here. This is open interest. Not a financial advisor, but this is a lot of wasted money. No bid at all right now. And anyone who's trading options knows that it's always better to buy time, to not fight theta, and not fight second order Greeks in this market environment. But again, not a financial advisor, I'm just kind of saying what I watch and what I see. And what we want to watch in flow trading, and everyone who listens to this video, what I would say it's going to be important to watch is what's going to happen with the open interest of the at the money and slightly in the money, and more importantly, next week and a few weeks later. If there's pressure, it's going to go up. If there's negative delta pressure from puts, it's going to go down. It's very simple. That's how meme stocks move. They move due to options activity. Now, I will end the video with saying that, first of all, this is January 2024. This is the main watch for us on AMC. This is what's driving the move, in my opinion. We saw a lot of activity on January 2024 on both sides, a lot of wild spreads. And I would watch the $8 calls. I would watch kind of delta, open interest, the volume, and what happens with this, because it has a lot of pressure. This calls, even though they have a lot of, there's like 395 DT, so there's a lot of time until expiration here. This is in accumulation, this strike, and it's at the money, meaning one strike above the in the money strike. I think that's it. This was a bit of an AMC video. Again, really trying to help anyone who asks me on Twitter to talk about it. And let me go on a quick 1 or 2 minute rant, whatever. There's a lot of misinformation online. There's a lot of crazy stuff online. Some of it is funny, super funny, I gotta be honest. But what I don't like seeing is retail investors fighting other retail investors or traders. People need to look for value and people need to support value. I will always support data and value. Again, I don't like notorious short selling. I'm always going to support longs. That's why we talk about always on flow trading. Even if I want trade a stock, I will help everyone with what I see, kind of look at the options flow, dark pools flow, trying to analyze the macro through ETF and through overall market activity and sector rotations. But people need to start supporting more value and data. because it's slowly fading away from Twitter and from a lot of other online places. And the only way that retail can succeed in the markets long term is if we accept value and if we open our mind for more and more types of opinions and more types of value. That's it. Hope you guys enjoyed the video. If you did find value, please like the video, subscribe to the channel, and let me know in the comments what you thought about the video. That's it. This is the way.